From an international perspective, I've spent time in advising in Europe, in the Middle East, in India, East Africa, a bit of Asia, a long time ago. The question that people need to ask is, what do consumers want? And it comes back to regulation and governance. What do consumers want to be protected from a tail end of operational risk hazard that the government or the regulator should have prevented happening? Yes or no? When you ask consumers this, what are they going to say? They won't even know what you're talking about. If you ask consumers whether they want an effective banking system, an effective insurance system, products that work for them, services that work for them, if they want national champions that operate not just in Ethiopia, but across East Africa and Africa, and possibly globally, they will say yes, 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 and yes. They won't know what you're talking about from a regulatory perspective. And the issue we're dealing with is that in the past, let's say at least 5+ years ago here in Ethiopia, everything was government controlled. What consumers wanted was government controlled. How the government legislated for that, controlled that, and regulated that was government controlled. What we're being told now is the government no longer has the ambition. The government no longer has the capacity. The government no longer has the resources to do what it used to do and what we were grateful possibly that it was doing. We, at the private sector level, have to make change. We have to invest in what's needed. So when it comes to education, a point was made earlier, yes, of course, an institute for bankers would be a great thing, but not set up and run by the government or the regulator. Banks, insurance companies should pay for these things. Banks may choose not to participate in the industry-wide activity because as a matter of competitive advantage, a bank may want to train its own bankers from scratch. I'm a chemist. I had no idea I was going to end up in the banking industry. I was picked for whatever reason. I still don't understand it myself. I was trained as a banker. It took broadly speaking, 5 years of pretty well 50% of my time being trained in the various aspects of international banking and capital markets and money markets. That's a choice that the sector is going to make. The government should be a million miles away from it, but what the finance minister should be saying is what he said this morning is this is our vision. And he told us what his vision was, and we need to listen, because if we believe him, it's going to happen, and either we're helping it or we're in the way. So complaining about the problems of the past are unique to the past. If you believe they will continue into the future, you probably shouldn't be here. If you think they're going to change, then you need to get behind it and think, what can we do to help from a governance and in terms of the governance of the regulatory system and the private financial system, what can we do to assist these changes? Ask customers what they want. You can't even get up in the morning. In any other jurisdiction, you will be out of business in a year if you fail to talk about what consumers want. And the interesting thing about the discussion this morning is it took maybe 2 hours, 15 minutes for the customer to be mentioned at all. So moving on, I think the reality is that the regulator and the banking sector, as two separate players in the system, need to articulate what the 5-year and 10-year future will look like, in this case for the banking system, which is, I don't know much about insurance, I apologize. But the private sector itself and the regulator, I think this point was mentioned earlier, what is the vision of the future? How many banks do we need? Do we want a regional champion from within the ranks of the Ethiopian banks, yes or no? And how do we make that happen? How many banks are we going to need here? If you look at the Emirates, where I worked in the UAE, the GCC between 2008 2015, through the financial crisis, advising the government and the SOE restructuring. They had 7 in the UAE. They have 6 or 7 Emirates. Each emirate had 7 banks because that's what the emir of the emirate wanted. Probably one of the most unstable systems in the world at the time. It survived the financial crisis. Why? Because the central bank governor was thinking about the 3- and 10-year horizon. He wasn't thinking about stopping people doing business. So I think here we need to sort of reflect a little bit on where the regulation will be needed, not yesterday, not today, but in 5 years' time. We will have some form of capital market. We will have some deregulation in the foreign exchange environment. We will have a money market, an interbank market, which just don't exist now. Who will be running those inside the banks, let alone inside the regulators? There'll be products and services which consumers will have mandated, and hopefully we as an industry will have found our way to providing. There will be lending in the future that doesn't happen here yet. Cash flow lending. lending on the promise of future cash flows in the business. What percentage of the bank risk underwriting population knows how to underwrite future cash flows in Ethiopia? These are things we need to develop. In terms of the ecosystem generally, if we have more effective capital markets, let alone effective ones, there will need to be a more educated, trained, effective treasury universe. The corporate financiers and borrowers of money, you need to develop their capacity, their muscle to interact with the banks themselves, to demand the right products and services and the right credit and service levels. And fundamentally, one of the things that we don't really see here is the interaction between the capital markets and the insurance industry. So I don't know how many people can visualize what regulatory environment and facilitation environment is required for insurance companies to underwrite credit risk, for example, in the bond markets, to provide first loss guarantees in the bond markets. My point is simple. I think we as an industry and the regulator need to separately and together articulate very clearly what the banking industry of the 5-year and 10-year horizon will be like.